Lichtenstein. We are going to begin our big three, and we're looking at that right now. We have 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Alan Nuckman, Chief Market Strategist at BullseyeOption.com. Welcome to both of you. Alan, XLE is your first one on the, looking at the ETFs here. Why is this one jumping out at you today?
Well, boom goes the market. This is a segment that's been held back. We had new lows in crude, but nowhere near the new lows in XLE, which is the ETF that tracks the biggest energy companies. There's 27 individual stocks, and the PE is 8. Now, the theme for all of this, and it has been for weeks and weeks and months, and I know you guys were interested in my Brazil infatuation, but that was because of the pending dollar decline. We're starting to see that. The dollar fall here is really going to be helpful to the energy sector and for crude oil.
Right, understood. Ben, what do you think of the chart when you look at XLE?
You know, I think that this is at a pivotal level right now, Nicole, right around 80, 50, 81, a big area where it could go either way at this point. So I'm curious to see what we're going to see in terms of Alan's trade. But I've started out with a more granular look at price activity. I've got a 15-minute candle chart up here. And as I look at, what was a bit of a double bottom that formed a bit of a base around the $76 level, my eye was drawn to these phases of price development that I look for. A consolidation phase, you had a nice little vertical phase to the upside, and that basically teetered around this 80, 50, again, this 81 level, we'll call it, and just pointing out here that significant area here in terms of potential balance area to look for as we take a look here at the bigger picture you're going to see. Now, we just saw a bit of a trend environment to the upside. Here you can see it's somewhat counter trend, but again, in a very similar fashion, as you look at this chart, you're going to see an area of balance which formed. You're going to see a high conviction trade to the downside, so that big move lower, and then in this instance, you can see how we're basically just sideways consolidating right around this 79, this again $80 area, we'll call it. You can see the significance of and how we're just sort of teetering. There's not a lot of conviction here on either of these charts really in many ways, and then you step back and you look at the daily time frame, and this is where you see high conviction. 3 big areas of consolidation that formed higher and higher levels. You can also see the significance of this $81 level again here. You've got an upper extreme around 95, a lower extreme around 71, 70-ish for the most part. That middle area is going to be significant. So I'm looking at this, and I can understand what Alan's talking about. A breakdown here opens up a door for a retest of this lower extreme 65, but I can also see a bullish stance here, supportive of the long-term narrative. And again, the idea that holding this level 81 opens up a door for a retested 95. This is a big area right now. I'm beginning watching that for the next couple days, couple weeks.
Absolutely, and that's what we've been watching when it comes to energy and the moves that we've been seeing. Alan, any final thoughts there before we get to RIVN?
Well, here, I want to get into this deeper here. So it's also a way to play stock. Very important here. So I'm looking at the September 77 call. It's trading about 650. It's in the money. It's got 3 months of time. Now, looking at the chart, we've been trading between 70 and 90 for 1 year. So 80 is an important pivot. We popped above it. So what that means, there's usually a pop to the range top, which is 90. So if we get up to that 90 level, then a breakout targets 110. So there's a lot of possibilities here. But what I like best is, again, the dollar decline. And the fact is we held strong when you saw the crude oil make new lows here just the last couple of weeks. This index, this group of companies held very, very, very well. So again, the PE is 8, inexpensive, has a lot of catch up to do compared to the overall market, and a limited risk option with time is the way that I look for this sector to pop.
All right, and we'll watch for that too. All right, let's turn our attention over to RIVN. You know, what's hot, what's not. You know, we're starting to see some RIVN trucks on the road, but what's been going on? It's sort of been disappointing for folks in comparison to some of the other EVs, but it's an exciting idea. Where do you stand on RIVN?
Well, technically, it looks great. It gives me what I want. It's got a couple of things. I'm a follow the money guy, and you're seeing some money, smart money, getting in leverage long positions here. That's very, very positive. We based out between 12 and 15 for 3 months. A breakout of the range targets 18. This was at 40 just in September. Look at how fast Tesla has moved here just recently. So again, a limited risk option. I see this bullish divergence. It made new lows in April, but not new highs and implied volatility. That's a sign of a bottom for me. We've seen that success over and over and over. If you go back and play some of those big three archives, that's what we've been looking for. So the September 12.5 call, again, the low is just under 12, trading for about 375, 3 months of time, and you put yourself in position for success with that.
I see. All right. So what do you think here with Rivian at 1482 today? Ben, what do you think of this chart?
1482 today, Nicole. Alan mentioned 40 just recently. I guess if you liked it at 40, you got to love it at 1482, as the old saying goes, right? Let's just begin with a more granular look at some of the trend environment we've been seeing to the downside, because it's pretty well defined in shares of RIVN as well. This chart actually going back to, well, these are hourly candles to, we're talking the middle of February when the stock was up around 21.68. But what I want to point out again is that high conviction trade that we see to the downside and that very much sideways consolidation. There's just not a lot of conviction again since, well, again, beginning of this year, basically. You can see mostly just teetering around this level here. I do want to point to what we're seeing here in terms of the bigger picture here. We're going back now to the middle of October of last year. And again, talking about if you liked it at 40, if you liked it at 32, at 20, in these areas of value that formed, 14 right now, well, you got to love it in this area, right? But you can see that migration of value to the downside, not only in terms of that hourly candle chart here, but these are 4-hour candle charts. Again, we're going back to the middle of October in this instance, and I'm just going to keep drawing this one out because, as I mentioned here, we're in a trend environment to the downside on multiple time frames, more granular, that we looked at the hourly, the 4-hour, and now you can see again, in this instance, we're talking about the daily candles. This goes all the way back to the highs that we saw up around 179. Alan was talking about the stock around 40 recently. Here are some of those areas of consolidation we looked at on the way down, but until this stock gets at the very least above 20, from what I'm seeing here is a very well-defined trend here on the intermediate, the more intermediate, well, granular intermediate and longer-term time frame here. Just no indication that we've rejected this migration of value that we've been seeing to the downside.
All right, thank you for that. And that's what you're watching too, Alan, but you have high hopes.
Well, I have seen my indication. My indication is the fact that we made new lows but not new highs and implied volatility. That's a very, very powerful signal of sentiment shift. And again, for me, being long from 12.5 in a limited risk option with time for development, that's the way I position. And, the risk reward is on the upside, obviously. And you got to ask Ben, yes, you see a negative chart pattern now, but that could quickly change. I'm looking to break out about 15, and that's going to change my mind. Ben said 20, but I don't think, it's a position to short either. So, I look at this being bullish, being optimistic. I think there are a lot of things that can get this stock on the move on the upside because there are so many people have built up short profits. They're going to have to lock that in and take that home to the bank at some point on any move up.
Okay, thank you for that. And last but not least, can we take a look at Unity? Alan, why are you watching this one? Do you follow this one closely all the time, or did it recently pop out at you?
Well, it's popped out. There's a couple of stocks that are in this space that are breaking out, and this one is obviously more developed, and I would even think that Ben would like this breakout. So we've been between 20 and 40 since September. Breakout target 60. We're at 60 just back in August. We're above that range level right now. So now we need to see some follow through. So what I'm doing, since it's further developed, I'm buying less time. I'm buying an in the money option, a 35 call, which is, $6 in the money. It's trading at about 8 right now. But I'm only buying 2 months at time because, like I said, it's not as much of an anticipation. It's looking for follow through on this move. And that's what we're looking for to see with that limited risk option.
All right. What do you think about, Ben, about Unity?
Well, it kind of makes me think of that old Worldwide of Sports commercial at the beginning, right? I think it was ABC Sports, the thrill of victory or the agony of defeat, ultimately. And I think that's what we're going to see in this because we're testing a key area. And this is an area I don't expect to spend a lot of time here. I'll show you what I'm talking about in the bigger picture daily. But let me show you first and foremost on the more intraday, more granular time frame, the 5-minute trend up here in this instance. You can see I went ahead and mapped out some of the areas of consolidation. So again, supportive of what Alan's talking about in terms of potential breakout. This stock bottomed out, if you can see, down around 34 last week. Since then, we've been, again, migrating areas of value to the upside. So you get that working assumption that we'll continue to do so. That would be the next area of value forming above this $42 level, above this 41 area of value that's formed. Now, let's move away from this granular time frame. I don't want to get too married to that. You can see a pretty well-defined trend here over the last couple weeks, though. We were down around 26. 26, 25, rallying all the way up to 42. Again, I don't want to get in the way of this, right? Pretty well-defined bottom left to top right. Not a lot of really well-defined migration of value here, but definitely a well-defined trend. And here's what I'm looking at now in this instance. I mentioned here a key area of resistance. You got a triple top. You can see that coming right into play where we're testing right around this 42. I guess one could argue it might be even a quadruple top if you go back to the spike up at the end of August that we saw last year. So a key area right now of resistance. This, though, keep in mind, we're in a bit of a bearish pattern here. We saw conviction to the downside, sideways consolidation, a failure at this upper level, opens up a door for a retest to 33, and then ultimately a retest to that low that we saw the fall of last year around 21. But a breakout here, yeah, there's room to go in this instance, I guess, to the upside.
All right. Well, that's pretty great. Thank you for that, Ben Lichtenstein. Alan Nuckman, final thoughts here?
Breakout or fake out breakout? We don't know, but that's why I trade options. But we are obviously in a bullish breakout market here. We've seen it in the NASDAQ. We've seen it in the S&P. We've now seen it in the Russell, and hopefully we'll see it soon in the Dow. Call it a comeback. The Dow's down 8% from its all-time highs. The NDX down 11% from its forever top. And the S&P was less than 10% from the all-time record. So, you don't buy a suit because it's 10% off. You don't buy a car because it's 10% off, because it's not enough. So I don't know why people aren't buying stocks now. It looks like we've established our base bottom and we've seen a boom.
Thank you both so much for the big three today. You're both amazing. I love looking at this each day and all those example trades there. Alan Nuckman, appreciate it. Alan Nuckman, bullseyeoption.com, and our own Ben Lichtenstein showing you every move on those charts. Thank you for that.